for the Start Trading Overview. I did a video not too long ago. I did a video that was titled Never Blow Another Trading Account Again, right? And within that video, I discussed that, well, actually at the start of the video, I talked about the steps that you could take in order not to do that. But it was too, I wouldn't say vague, but it was too brief, because what I was doing was, well, what I want to do today is actually do number 2 of that, right? And just do a little bit more of a deep dive. And for those of you who are already here, following me for a while, so the private clients that are watching right now, because this is the live room, here we go. A lot of you already know that what we do here follows an acronym, and it's TVR, okay? Testable, verifiable, and repeatable. What I would like to do with you in this video, in this session, is explain to you a little bit more of what the insight is with TVR, and how you were going to take that and implement that in your own trading. And the reason why this is never go broke again, number 2, is because what I'm going to share with you today is, number 1, it's not often talked about and discussed enough. And number 2, if you don't do this, I want to make sure that you hear this well. If you don't do these steps, and follow this streamlined approach, if you don't do this, you will never, ever, ever make trading work for you. Ever. Guarantee it. That's how crucial these steps are. And before I do that, I just want to run through the trades that are on my radar for today. Now, last week, what you're looking at here in front of you right now is the euro dollar. The euro dollar on the 1 hour time frame. Just to recap a little bit, we absolutely crushed this and the pound dollar. We traded it all the way down last week, right? And you can see those in the replays, right? We do everything that you see here. Proof of concept is key, and also transparency is key as well. So in the replays that you have access to, you can go back and watch how we identified those trade opportunities and how they played out, right? So we absolutely crushed pound dollar towards the downside. We didn't quite get this one here, actually. As you can see, this pattern trade, we didn't get that one. That's okay. But we continued to do what's called a trend continuation trade strategy towards the downside. Crush that. And what I mean by that is, I'm proud to say we did about 600 pips last week. And yeah, we also traded the euro dollar. So back to the euro dollar. All the way down, and we are going to continue to do that. As we traded it down, I had a pattern trade setting up here. I had to take it, right? Every single strategy that develops, I have to execute it. So we came down and hit target 2s and immediately bought it up. Now we only hit target 1 here off the back of that pattern trade. So right there, we only hit target 1. Right there at the 382, I took off half of the contract. So everything that we do in the live trading room, we do 2 targets, right? So 2 contracts. I took off half at the 382, rolled stop to break even, and then I was looking for a follow-on target up into the 618. As you can see, didn't quite get there. We came down and got stopped out at break even. Just a couple of recaps here now of the trades that we took. Now, what's happening live right now? For the 2nd of September. Yeah, so August is done. Finished. We're up green, so that's good, right? Now, how is September going to play out? Well, we'll show up every single day, trade the plan, and see what happens towards the end of the month, right? We just do what we're supposed to do. Let's follow the plan. Daily disciplines, practice daily. This is a very simple trade idea. Like last week, we had a lot of trend continuation trades. And as you can see, this one is no different, right? This is no different at all. On the euro dollar 1 hour time frame, we have another move towards the downside. Again, 1 hour time frame here. So this is my trade opportunity for today. This, if I get a move towards the upside here, then I'm going to sell it right here. Okay. So if I get a move back up into previous structure, this is our support level. So this is our support zone. Previous support becomes new resistance. So this, anywhere within here, right? Price action trading anywhere within this box. This is my sell zone. Yeah. So I've identified my sell opportunity with our Fibonacci retracement. So I've got my entry. We have our stops above our cycle high, looking left. And then we're looking for follow-on targets, looking for target one, down at a retest of the lows right here. And then follow-on targets down at a 127 right there. So euro dollar on the 1 hour time frame. This is a trend continuation trade, potential trend continuation trade right there. Why do I say potential? Well, we can absolutely get a drop right here, falls off cliff, and that's that. Well, if that happens, what do? Well, you delete your analysis and you start all over again. That's it. I forgot to mute my messenger, and I can't right now. It's just I'm hearing bing, 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 and towards the back here. I can't go and grab it, but someone is pinging me right now, and I can't see it. So I apologize for that. So we get a new structure low right here because we break and close below. All I'm doing is waiting for a pullback, and we're going to sell it down into target ones and down into target twos. Okay, Fibonacci extension from my previous high all the way down to previous low. Yeah, that's where my Fib extension is. Now, what have I got here? So similar setup, right? So yeah, we got really good trades towards the downside on the pound dollar 1 hour time frame. Didn't get a selling opportunity here in the form of a pattern trade, but that's okay. We continue following the market here. So we get another move towards the upside here. Let's just move that down. And then what do we get here, right? So price action coming all the way back down. At this candle right here and this candle right here, you can see looking left that we retest these lows, looking left, and just make sure, yeah, we do get a lower low, lower close right here on that candle. Anyway, so as price action comes down, all the way down, it gives us what? Right here. Gives us a new structure low, yeah? So price action comes down, gives us a new structure low. Therefore, what's on our radar for today? Well, another potential trend continuation trade, right? All we're doing is waiting for price action to come all the way back up into our structure level right there. So we have our entries right here. Previous support becomes new resistance. Yes, it's pretty identical to the one on the euro dollar. Previous support becomes new resistance. This is the area where we want to sell, right? So this is where our entries are. And then our stops are above that cycle high right there. And then we're looking for a target at a retest of the lows. Now, not all the way at the lows. Don't want to get greedy with it, right? You want to, when you're looking at profit taking, right? Or when you're looking at anything to do with trading, you're trying to stack as many odds in your favor as possible to increase the likelihood that you are going to hit target, right? Because as you can, when you go back and you test price action, right? When you go back test and you look at historical data and you look at the same setup over and over and over again, what you'll see or what you'll find is that price action does come all the way back down, but sometimes not all the way at the lowest low. And then from there, it immediately turns around, skyrockets towards the upside, right? And the same is in the reverse as well. You will find that in your own testing. So what we did here with the trend continuation trade that is where we want target ones, where price action is most likely to move towards the upside, to increase the likelihood that we are going to hit targets. Again, stacking odds in your favor. That is what we want to do. We want an edge in the markets. That is how you do it, right? Because now this is a right to downer as well. This is what you're looking for in trading. How many times, based off your strategy, okay, using an if equals then approach, if this happens, then we do that, right? Syntax is in order which events occur. What you want to do is do exactly that. So you can systemize your strategy. So that's no discretionary, no subjectivity. It's if price action does this, then we are going to do that. Now, this is the right to downer. How many times was I right in guessing the direction of the move? How many times was I right in guessing the direction of the move? That is your strike rate. Okay. How many pips did I gain on average when I am right? And how many pips did I lose on average when I'm wrong? That is very, very, very important. Yes? Again, what is my strike rate? And what we try to aim for is just to be half right. That's it. If you can be half right at guessing the direction of the move, we're halfway there. After that, what we want is a positive risk to reward profile. So every single time that you execute a buy or sell in the markets, we want to have a positive risk to reward profile. We want to gain more when we win than when we lose. Yes, that's it. That's the formula, right? That's all we want to do in trading. How many times was I right in guessing the direction? How many pips did I gain when I am right? And how many pips did I lose when I'm wrong? That is it. That is very, very important to write down and to understand. If price action moves up to our previous resistance level, our previous support level, which becomes resistance, then I want to look for a sell, right? If price action does pull back into that area, then I want a positive risk to reward at my entry. So where do my stops go? Above the cycle high, right? Where are my targets going to go? A retest of the lows. And then for target 2, because we always trade 2 contracts, my target 2 is going to be all the way down at a 127 Fibonacci extension, right? So move that over there, put that up here. Here is my risk and here is my reward. Now, based off this pattern, so this market behavior, right? And this market behavior just follows this. Okay, I'll just quickly show you. So what I'm looking for, let's get some, there we go. So what I'm looking for is this. If this is my starting point up here, okay, just to make it more visually easier to see, this is my starting point and we're looking at bearish moves, right? Trend trade towards the downside. Here's my starting point. Now, if I get an initial move towards the downside, followed by a pullback, followed by a new structure low, if I get this market behavior, this is a pattern in the markets. That's what that is. Because all we're doing is exploiting market behavior. That's it. So if I get an initial move, followed by a pullback, followed by a new structure low, and I get this, what we call a lightning bolt symbol, right? If I get that, then all I'm looking to do is if I get a pullback back up into this level right here, I'm looking to sell. That's it. I'm looking to sell and retest the downside. That's it. And what I've found historically, and what you can too, and what you will find, if you do that, is you are 50% accurate in guessing the direction of that trend. So after price action puts in this, followed by another pullback, and you sold it right here, you guess the direction that it continues to move towards the downside, I would tell you that you're 55 to 60% accurate in guessing the direction of that trend. That's exciting, right? Why is that exciting? Well, we can turn it into a system. We can turn that into a strategy. And we use an if equals then to do that. So if price action comes up and retests right back up here, then we can look for a sell. My stops are going to be above the cycle high, looking left. And then my target is going to be a retest of the lows. Now, what have we done here? So here is your risk for about 15 pips, let's say. And here is your target for 26 pips. What you've identified here is you have a positive risk to reward profile. That's it. By using if equals then. So if we see this market behavior, all we're doing is waiting for a pullback back up into this level looking left. So if we get a pullback, then I look for entries. Here's my entry, here is my stop, and here is my target. The same way every single time. So again, if you go test that, you're over half right of guessing the direction of that move towards the downside. And now, after you enter the market right here, after you do a sell, you have a positive risk to reward profile. So think of it in terms of a coin flip, right? So if you got a coin right here, you got heads and tails. So heads you win and tails you lose. And then we flip that like this. And I tell you that half of the time it lands on heads. But every time it lands on heads, I'm going to give you $1.50. Every time it lands on tails, I'm going to take away $1 from you, right? So you have a 1.5 to 1 risk to reward profile. And I give that coin to you. And I say half of the time, over half of the time, that's going to land on heads every single time you flip that coin. My question to you is, how many times do you want to flip that coin? As many times as possible, right? So that is your edge in the markets. That's it. So I've given you two very important pieces of information here, insight. So how many times am I right in guessing the direction? How much did I gain on average when I am right? How much did I lose on average when I'm wrong? And you go and test that, okay? Which brings me to the acronym, right? So TVR is what we want. Yeah, so this is, I'll get to that in a second. As I'm going through my live trades here, I'm trying to explain that as I go. So here's another trend continuation trade on the pound dollar 1 hour time frame, looking to get short right here. What else do we have? So we missed a trend continuation trade towards the upside here. Again, you got the same setup right there. Price action pulls back into that level. Look left. Previous resistance becomes new support, doesn't it? Right? Previous resistance becomes new support. Price action breaks towards the upside. So we get initial move towards the upside. Remember what we just covered before. Initial move towards the upside, followed by a pullback, and then followed by a new structure high. There's that lightning bolt, isn't it? Yeah. And then it's exactly similar to the setup, the example that I just showed you before, just in the other way around. So as we get a pullback back down into this zone right here, we're looking for a long opportunity, aren't we? So this, where our box is right now, that would be your buy, right in that box. So price action pulls back down into that level, looking left, that would be your buy. So where are your stops? Remember what I said? So your stop is below the previous low, looking left. Where are my targets? Looks like it already hit target right here. So retest of the highs. Again, not all the way up here. It's not all the way up here. Don't want to do that. You want to bring it down a bit. Increase the likelihood that you hit target. Otherwise, it may fall short of retesting that high and completely drop from there. So this is our risk to reward, isn't it? Right there. Now remember, we don't just trade one target. We trade two targets. So here is my Fibonacci extension from our previous low to previous high, back down in. And we want to look for extended targets. That's why we use a Fibonacci extension. We're projecting where target 2 is going to be. So if I drag this all the way up into 127, that would be my target 2. Yeah. And what I want you to pay attention to is this risk to reward profile right here. And drag that over there like this. Okay. So what do we have? Over half of the time, we're going to guess the direction of the move. We're going to guess that price action moves towards the upside. And what else do we have? Well, we have a just over 1-to-1 risk to reward, 1.5 risk to reward, right? The $1.50 when you win, the $1 when you lose. That's it. That's that coin flip right there. So after we hit target 1, we take off half and we roll stops to break even, and we look for that follow-on target towards the upside. But what you've identified here is this market behavior, is we just want to be over half right, and we want our entries, stops, and targets the same way every single time. That's it. If we do that, guys, then we have a system. Then we can go trade that. And then we can go test that, right? So that brings us to our acronym, T. We've got T, V, and then R. Right here. Is that an R? That is an R. Right? You got T, V, R right there. So this is a really, really good strategy. This is a trend continuation trade strategy. And you can actually go learn that on our Star Classroom for free, by the way, which I can leave a link in the description for you. Just sign up there and go check that out and try it yourself as well. That's the trend continuation trade. But what I've shown you here, it is testable. That's what T stands for. It's testable. So I can teach this to you, teach a strategy, and then you can go and back test this strategy and verify it for yourself. Now, this is very important. If I tell you that this strategy is over half right, and you have a positive risk to reward profile, and you have an edge trading this strategy, well, if you hear me say that, then you have to take my word for it. So you have to trust me on that, right? However, if you go learn the strategy and the rules of engagement, and you go back historically and you test this, you can then go and verify that for yourself, right? Which brings us to V. So now it's you trusting the process. You're not just taking my word for it. Now you're taking your word for it because you've gone and done it yourself. So now you believe you because you've done it and you've experienced it. Make sense? That is very important. T is taking a strategy where you can take that and go and test it. That's what we've got. And then when you do, you can verify that data for yourself, right? So then you know that that strategy has a positive expectancy. And all that is a mathematical proven probability that you gain more than you lose over time, which is what we discussed over and over already in this video. And then R is you get to go and repeat that over and over and over. It is replicatable. So you take your back-tested data, you take all of that, you know the strategy has an edge, you know you're over half right, you know you have a positive risk to reward profile. That is what you want to then go and take that and mimic what you tested, but in a live market environment. That's it. That's it. The byproduct of doing this process correctly, you'll have incredible results for your efforts. And those results are going to be positive results for you. You do that right over and over and over again with any strategy, on any pair, on any time frame. And I promise you, you will have extraordinary results. Because what you've just seen here, what you've just witnessed, is how to identify that you have an edge in the markets, trading your strategy. Because a lot of people, what? They don't know. Majority of traders have absolutely no idea that what they are trading gives them an edge or not in the markets. So trading this strategy, trading this system, what is my expected return on average? And what am I expected to lose trading that? Two crucial things that you need to know and be able to answer, by the way, or you're effed. You will never, ever, ever make trading work for you otherwise. Because what we're looking at, I can hear some voice in the back. Yeah, okay, whatever. What we're looking for is longevity. Anyone can have a win streak for 3 months and do really well and have exponential gains in their equity curve. And then what happens to those guys? They trade that shit into the ground because they don't freaking know their numbers. Because what happens is once they start entering that loss streak, the lose streak, which happens to everyone, by the way. Otherwise, they're bullshitting you. Happens to everyone. Once they enter that drawdown period, most traders can't trade out of it. They can't. Because again, they don't know the numbers. They haven't tested their system. They don't know their own data. So then when they continue to trade live, they're only focused on profits. They're only focused on the money. That's what happens after a loss streak. They start to double down. They chase the trade, right? They're looking for trades that aren't there. They enter for fear of missing out. Markets moving off without them. They start to move their stop around. Take profits early. Right? This is what happens. And they circle that endless cycle, right? Round and round, called the black hole of the abyss. Until, bang, their account implodes again. Then they got to fund it again, and then they go through exact same process all over again. And they repeat that cycle. And they will continue to do that. The only way to stop that and not F it up again is by doing exactly this. Is by taking a strategy, test that, right? Test it over 100 times so you know your average. I've said it a lot already, but I'll say it one more time. With your strategy, how many times was I right guessing the direction of the move? Which is what you see here. On average, how much pips did I gain when I am right? And on average, how many pips did I lose when I'm wrong? This is all you want to find out. Test it over 100 times so you know those numbers, so you know your average. Do you have a green light with the strategy that you want to trade? Or is it red and doesn't give you an edge? You need to know that. Otherwise, you end up like the majority and you'll get emotionally unstable with it. And you just fuck everything up over and over and over again. So I think, and I wholeheartedly believe, that this is insight that I want to share with you. that you can start to be conscious of in your own trading, right? And we got access to that anyway below. This kind of stuff doesn't deserve to be put behind a paywall, and it does deserve to be talked about. Without sounding arrogant, what I'm sharing with you now, is what's going to save you from blowing an account again and again and again. Account after account. Let's stop that now and start doing this. Learn a strategy, get a system together, and follow what we outlined in this video, in this session today, right? So what do we have? Another trade set up here. So I sold dollar yen. So here was another one. So we bought it down here and we absolutely crushed it. So we did well on the euro dollar, we did well on the pound dollar, and we did well on dollar yen as well. So that's available again in the replays, right? Trend continuation trades. The one that I'm just showing you today is doing incredibly well. Again, you can learn that with the link below. Right? It's got the exact rules. Yeah. Now, I bought it up here. And then immediately after I hit target 2, you can see this red arrow. So I've immediately had to sell, right? So what I've done here, if I grab my Fibonacci retracement tool, what I've done is I've sold a bat pattern. Yeah. Price action, we traded it all the way up into the 886. Excuse me. And then we had to sell it again because we followed the plan. That's it. So we have our swing high all the way down to swing low right here. You can see we come up into a 50%. Maybe you can't see that clearly. So numbers are overlapping there, right there. So we come up into a 50, we come all the way back down. We don't exceed this point looking left right there. And then we're looking for a CD completion all the way up into the 886. So what you can see here in front of you is we have sold the market at the 886 in the form of a bat pattern right here. And this bat pattern right there. So this is our sell zone. Price action bouncing around right in that zone. But this bat pattern on the dollar yen on the 1 hour time frame, we'll see what happens with this. Stops are above our cycle high, looking left. Will we get stopped out? Maybe. Will we come all the way down and hit target 1 and hit target 2? Maybe. We don't know. But what I do know is if I continue trading it in the same way that I'm showing you, over time, on average, I gain more than I lose. How do I know that? I tested it. In the same way that you have to go and test it. If I didn't, then I wouldn't know if I have an edge. If we do, and I do find out we have an edge, all I have to do is come into the markets every day and execute the damn thing. So it doesn't matter if we go on and hit stops. It doesn't matter if we go on and hit targets. None of that matters. What matters is, did we show up and trade the plan and execute it every single time it presented itself? That's what matters. And that's what we focus on here. So dollar yen, 1 hour. Bat pattern sell right there. So what I do know is price action is going to do one or two things from here, isn't it? It's either going to shoot up and stop us out or drop off a cliff right here into target 1 and target 2, and we make some money on that. But as soon as I executed the trade, I accepted the initial risk. That's it. Money's gone. That's it. So we just wait and be patient. That's all we need to do right here. Right, so same with a sell on the Aussie dollar as well. So what I'm doing here is I've got a BAT pattern entry right here. Actually talking to someone I'm working one-on-one with at the moment. We just went over trading multiple strategies at the same time because both have an edge. Right, so what we're doing is we're entering at a CD completion. So if price action comes up into our 886, then I'm looking to sell. Yeah, because we have our starting point up here, initial low, pullback, new structure low, pullback, sell. Right, so also got a BAT pattern sell in here too. So if we come up in this zone, sell zone right here, then I'm looking for trend continuation trade targets, which is what you can see here. So stop is above the cycle high. Target is a retest of the lows. Again, not all the way down here. Bring it up a bit. I want to increase the likelihood that I hit target. That's it. And then follow on targets. So Fibonacci extension from this high all the way down to this low and back up in right there. So it gives us the 127 Fibonacci extension there. That will be my target too. And again, just to point out to you, look at the risk to reward on this. Yes. That's what we want to pay attention to. Note the risk to reward. Again, you can go test this. You can go verify this for yourself. I'm over 50% accurate on guessing the direction. Note my risk. Note the reward. This is trading. It doesn't have to be over complex, does it? What I'm showing you here is the secret to trading and making this work. %50 accurate, gain more than you lose. And you win. Isn't that what it's about? Isn't that why you watch all this trading material out there? Because you want to know how to make money in the markets? This is it. This is the concept that you need to understand and execute well. And if you do it this way, you will get those positive results that you are looking for. Ultimately, you will get the profitable results that you wholeheartedly deserve to have if you do it in this way. Because now you understand the secret to trading and how all of this works. Yes? Good. Aussie dollar 1 out. Looking for a sell opportunity right here. Good. Now, Aussie yen, missed opportunity here as well. See that? Dun-dun-dun. Move towards the upside, followed by a pullback, new structure high, followed by a pullback. Looking at a very, very, very nice trade right there. I'm not around at the time, as you can see. Take advantage of that. But there it is again. The trend continuation trade. Right there. Pull back into this level, entries, stops, and target. And then, of course, follow on target as well. The Fibonacci extension at the 127 right there. Target 2. Really, really, really good strategy. Again, that you can go and learn below and start trying it out in your trading yourself. because I know it's over half right with the positive risk to reward profile. Therefore, I love sharing it with you. So then you can go take that and you can go learn it and you can start implementing it in your own trading right now and start seeing some consistent results. Here's a losing trade. Hasn't lost yet, but I feel it. This is a trend continuation trade, right? We had a massive win streak with the trend trade last week. Now I'm getting a loss right here. Well, I predict it will be. You've got the last stand right here. That's the last stand right here. They don't always win. That's why it's important to be 50% accurate. Right? They don't all win. Right? You find something that's 100%, you let me know. But yeah, so this one looks to be reversing on us and we might end up falling off a cliff there, but we may be surprised. And price action freezes, holds right there, and then we don't know. We don't know. We let the trade play out. That's it. And I got nothing on Kiwi Yen at the moment. But that's it. If I go backwards, just to recap what is going on here. Sell opportunity, currently involved in this one right there. Yeah, missed out on 2 winning trades today because I wasn't in the office at the computer able to execute. That's what happens. That's known as human error. Happens. I share it with you right now because if you think it just happens to you, no, it happens to everyone. It does. So here we're looking for a sell as well. Pound dollar 1 hour time frame trend continuation trade towards the downside, of course. Nothing on euro yen for me today. And still waiting for a sell opportunity for us over on the euro dollar on the 1 hour time frame as well. Yeah. But that is it for the London live live trading session for today. Bit of a mouthful, that one. I will get the replay up to everyone so you can watch it for those who cannot make it live, which is a fair few of you, by the way. But I have that replay up for you soon. Until next time. Oh, if you need me, please reach out to me. I'm always available to you. If you're watching this over on my channel, I appreciate you. If you've watched it all the way through, I'm very grateful you have. I trust you had a lot of insight here today, and it's going to serve you well. So if you do want to learn the language of the markets, identify structure levels, use the Fibonacci retracements, and also learn the trend continuation trade strategy, head down into the description there and you'll see the Start Classroom. So you can click on that and sign up for free. It will forever and always be free. And you can start learning that today. Yes. So those are the trade ideas for today. Let's have a wonderful day today. Until tomorrow, be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much, everyone.